Hello everyone. In the last video we have discussed that there are two accounting systems popularly known in the globe. One is a single entry accounting system, another one is double entry accounting system. In this video we are going to discuss what are the steps that involves in double entry accounting system. So we'll see the steps one by one. The first step in any accounting system will be a data collection. First of all, you need to collect the data of the business. So the steps starts from data collection, journals, ledgers, trial balance, preparing financial statements of trading account, profit and loss account, balance sheet as well as cash flow statements and funds flow statements. So what is the first step of double entry accounting system is data collection. Yes, if you wanted to prepare and maintain book of accounts, first you need activity proofs. You purchased a 10 lakhs purchases. What is a proof? There should be a purchase invoice. You paid a 1000 for electricity bill. What is a proof? There should be a payment slip with you, right? So make sure the first step of double entry accounting system is data collection. And here the data which we are collecting actually in a raw format. We collect business information in the form of purchase and sales invoices, receipt and payment slips, sometimes in statements. So we all collect the statements, we all collect the information of the business in the raw format, in a paper format. But it is very huge to maintain. So what we will do is, instead of, let's say if you really have a 10,000 transactions in a month, you need to hold 10,000 invoices with you. Very difficult to manage. So we will go to the next step. What is the next step? Journal. What is journal? Journal is a process which converts business activity proofs, which converts the data from raw format to accounting format. From where? From raw format to accounting format. Journal is a process which converts business raw information, business basic information into a two-line accounting transaction. The conversion of business basic information into an accounting transaction is known as journal. Journal is also known as book of original entry. What is the benefit of journals? Yes, there is a benefit. Instead of holding a 10,000 papers in my hand, it's okay to hold one book which includes all journals of these 10,000 transactions. So I no need to, if anyone asking me to share my business information, I can just share this book instead of these all papers, right? So the size of the data has been reduced in this step. But there is one disadvantage in this journal. What is the disadvantage? Yes, you have converted all these 10,000 transactions into 10,000 small journals, but there is no summary. Let's say there is a first one is a purchases, again some salaries and rent paid transaction recorded, again purchases, after 5 transaction purchase recorded, after 20 transaction purchases recorded, after 100 transaction purchases recorded, after 1000 transaction purchases recorded. I have the transactions one after one, but I could not see a summary of purchases in one place. Every time to know my total purchase, I need to check all these transactions every time. So there is no summary. The transactions recorded but not summarized. So we'll move to next step, that is called ledgers. Ledger is a statement which shows summary of each account held. The first account we prepared is purchases. So I will open a purchase statement. From all of these 10,000 transactions, I will keep posting all purchases into purchases book. You got my point? From all these 10,000 transactions, I will keep posting all purchases into purchases book. On the next account, I will open Mohan. and out of this 10,000 transaction, I will find out all Mohan related transaction, and I will post Mohan's transaction from journals to the Mohan's statement, so that I will get total summary of purchases, total summary of Mohan, total in the same way total cash available. So in journals, you are reducing data of the size by recording into journals. To get summary, again you need to transfer these data to ledgers. Yes, by preparing ledgers, now you got the total summaries. But again there is a problem. Is the summary right or wrong? Total purchases, let's say 1 lakh. Is a 1 lakh value right or wrong? Who will validate? Who is going to check this accuracy? Are you going to approach your senior accountant? Yeah, junior accountant? Yeah, chartered accountant? No. The next step you have is trial balance. Trial balance is a statement which shows accuracy of the ledger summaries. By preparing ledgers, you already got some summaries, the totals that needs to be validated by posting into trial balance. Just you need to post account to head and the summary. The total trial balance debits should be equals to credits. Then you can validate yourself. Then you can check whether the book of accounts you prepared are right or wrong. If total debits are equal to total credit, which means it is validated successfully, there is no mistakes in the data. Only after getting a valid trial balance you are allowed to prepare financial statements. Here we have 3 sub-statements. One is known as trading account. Trading account is a statement which shows business gross result. Whether the business giving you gross profit or gross loss can be known by preparing trading account. And we have the next statement known as profit and loss account. By preparing profit and loss account, you will come to know your business net result. Whether the business is giving you net profit or net loss can be known by preparing profit and loss account. And next you have the balance sheet. By preparing balance sheet, you will come to know your business financial status about assets, properties and liabilities. So all these steps are manual accounting steps. Collection of data, recording in journals, transferring to summary, validating, again preparing financial statements. We have seen the definition of accounting. What is accounting? Accounting is an act of data. Accounting is an art of data science which will collect the data, record the data, classifies and summarize the data as well as analyze the data. Yes, so the same steps are here. And in some audit cases, chartered accountant will also preparing cash flow statements and funds flow statements that we'll be discussing in the further sessions. See you again. Thank you.